Hello and welcome again to Money Talks with me, George Pitcher, and a pleasure to welcome as ever Edmund Shing of BCS Asset Management and the Idle Investor website. Now, Ed, this week you write about our retail scenes and how retail sales are going in the high street, and it looks like there's a bit of a retail boom going on, isn't there? I mean, it looks this must be a very big fillip to the government's prospects for re-election in May, mustn't it?
Well, I think that's right, George, because ultimately, whatever the polls tell us today, in the end, we do tend to vote with our wallets, and our wallets clearly are looking a bit fatter today because of the lower unemployment, strong economy, and of course, lower petrol prices, all of which are helping the retail sales business. We're spending more money because we have a bit more money to spend.
I see. So the feel-good factor is there. Now, in your column on IB Times UK, you are talking about Debenhams as being your nap this week. Now, I have to say, Ed, Debenhams is a funny old name from the past for me, and I'd have thought that kind of retail scene is over. You know, it smacks of the 1960s and department stores, doesn't it?
Yes, but you know, Debenhams it's an interesting story because, George, it has reinvented itself. It's not the traditional department store like the Army and Navy, which has been and gone, but it actually represents today more, I would say, boutique of designers. If you think like John Rocha, people like that are really, I think they represent the Debenhams of today. And actually, if you look at the retail sales breakdown, the bit that's doing the best of all is clothing, footwear, household goods, exactly the areas where Debenhams are well positioned right now. So, you know, when I look at Debenhams, I see a stock that is well positioned for the macro environment. I see a cheap stock. And thirdly, I see a stock that gives you a 4.6% dividend yield, so a nice little income generator.
Okay, I was a little prejudiced about Debenhams, I have to say.
You need to go back and have a look, George.
Debenhams is trendy. I have to come to terms with that. I'll go and have a look. Something else you're mentioning is SuperDry. Now, I have to say I thought that was a dry cleaners, but evidently it isn't. Now, that is a trendy brand, isn't it?
That's right. The parent group is Super Group, code SGP, but they own the SuperDry brand, which is phenomenally successful in the UK, has been expanding well into Europe, and is now looking to increase their expansion and their growth in the US. So this is a brand that's done very well, but is again growing, and we should see top line growth, sales growth of over 10% going forwards. It's again a cheap stock, lots of cash on the balance sheet, and it's going to start paying a dividend as well. So again, I think it tells you the management expectations are very confident in this stock right now.
So a retail scene that's booming ahead of the election, or having a little boomette, which must be very good news for George Osborne and David Cameron, as we say. The FTSE generally, though, is doing very well, isn't it? It's doing its best since about 2013 for a couple of years. So, so what else is in there that we should be looking for?
Well, I think, again, you're right, George. The FTSE 100 is up over 5% in the first 3 months of this year, which is, as you said, very strong performance, reflecting the economic boom that we do see. The sorts of stocks other than retail that I like are things like Standard Chartered. Okay. This is an odd little bank that people haven't looked at in a while. Again, it's an Asian bank. It's not really a UK company. They have basically no branches in the UK, very much focused on Asia, and are executing really quite an impressive turnaround in performance right now. Again, very good dividend yield, very cheap stock, and it's on the way back right now.
Very good. So a bit of a boom in the high street, which investors can catch on to, and a bank from the Orient that people should be looking at. Very good news, I'd have thought, for the incumbent government ahead of the election, but we'll see. We'll see. Thank you very much for joining us, Ed. Look forward to seeing you next week, and thank you all for watching. Goodbye.